Hello guys, how you all doing? It's now 8:41 in the morning. Monday today, and last week we had said that on this Nasdaq, because of what was happening there, we did have an analysis and then concluded that we don't think it would go and touch that. It has a potential of coming down, but even that being the case, we said even if it comes down, it will be going towards this nice support here, which is it's a daily support, which is the one that did what, that broke the trend line and also broke the area of resistance, which means this is a very nice area to buy from. And last week we were still somewhere up there, and then we said it is gonna come, to drop, and it did that. Now it is inside there, the thing, our daily support, where we are now. We are now, our eyes wide open. We are now looking forward, searching for buying opportunities, right? So remember, we don't just go and execute. The price is now inside our daily zone. Then we are now searching for reversal, signs of reversal, so that we can buy and hope that it will come to at least this. But the goal is to reach this one. This is the ultimate goal. But now, what if there was a question last week where someone asked that, what if the price doesn't give us any signs to buy here, but rather it goes down like that? If it does that, it's possible. That's why I'm saying, yes, we have reached the level that we want to buy from, but if it doesn't give us reasons to buy, we're not going to buy. So if it goes down like that, it means we'll be having a low lower than that, which means now you can even put your trend line there, because you can take this as one move up and then lower low. Then you'll put your trend line there, and then you can start searching for selling opportunities, because you don't have anything that says bullish. This would be broken. Then we can start searching for selling opportunities. And let's check if we still have this line here. This line, I think we drew it around the monthly. Yes, this is the monthly zone. So even selling, it's something that is risky, because of what, we are so close to the monthly demand or the monthly support, which can push the price up. So you are selling on smaller time frames against this monthly support. It's not a good thing to do. That's why I'm saying at this point in time, the odds are pointing to the upside. Monthly is pointing up because of what, we are touching the monthly support. That's the only thing that you need to take from this. And then weekly, what we did have on weekly was this last 3 weeks back, which was what, bullish engulfing, and the trend line is still up there. We still have a decent, remember this one here is that daily zone where I said that's the ultimate goal for us to reach there. It means it will be more like on weekly, will be like we're testing the weekly trend line. And yeah, on weekly there is nothing much that is pointing down at this point in time. The last thing that we had, which was something that you could analyze, was these 3 bars. They didn't change the market structure. The only way they can change the market structure is if this bar goes down. Then it will mean we'll be having this and the new low, then the weekly trend line will come there. I hope it makes sense, good people. And the daily is the one we started with, where we said we're inside a very nice area for us to buy. So I hope you guys your eyes are now like this, searching for buying opportunities from this area of support. And when you're buying, you can exit, because remember, you did have this. You can put it around there or at the trend line, look to exit there, because remember, we don't have to predict. As much as we can say the price is bouncing from maybe, let's say, daily support or weekly support or monthly support. Yes, it is bouncing from monthly support, but it doesn't mean from there it has to move like this all the way up. It won't move like this. In the middle, it's gonna pause and maybe pull back and do things like that. That's why when you're taking a buy here, you shouldn't just predict that it will go and do this. It can do that, Mara. That's not a good way, a sustainable way of doing things. Why? Because of what, there's always gonna be resistance along the way. So you just have to make sure that you identify those areas where the price could struggle to pass, and then you put this. It's gonna struggle to pass from opposing structure could be bearish trend line or bearish zone, which is what resistance area. So those are the areas where it's gonna struggle. So when every time you're taking a trade, make sure that you identify the opposing structures, which is where the price might struggle to go past. So when you're taking your buy or your sell, you identify this. So in this case, because we'll be buying, I need to identify areas of resistance and bearish trend line so that I can put my my take profit around those levels and just watch how the price reacts from there. So for instance, if this price was to go up and then I put my TP there, it hits my TP, and then what it does is that maybe let's say it does something like this, boom, and then it pauses there, I'm out, and then it gains the strength to go up and violate this and also the trend line. It means everything now is pointing up on this time frame. We don't have the next opposing structure is still far, which means I can buy and exit at that next opposing structure. Because if I just go and buy and predict that it will go and break this, it can do that, but it's not something that I would advise you to do. We shouldn't do things like that. Now make sure that from where you're entering to the opposing structure, you have at least 3 times the risk. Meaning, if you're risking $100 here, make sure this is the space here will give you 300, so that you know you are safe. You made 3 times what you were risking. That's it. That's enough. You don't have to catch the whole thing. Then you still make money. Because if you try and predict that it will move like that, and then it does this, it comes back, you're going to cry, and of which you had a chance for you to just exit and let it do what it wants to do. Alright, yeah, but all in all, nothing has changed. We are still inside our zone where we are looking to buy and go up. So smaller time frames, and we don't have anything as yet. Even to the left, we don't have nice zones because of what they had tail. But it doesn't matter, as long as maybe let's say you go to your H1 and you find let's say pin bar, and then you can just put your thing there because of what you are inside the daily support. Or if maybe you go lower than that, if your time frames include M15, and it's just that because we had this, now it makes it difficult for us to draw a trend line. But what I wanted to show you is that if maybe you're trading M15 and you come down here and then you find that the price has been moving like this, you can put your bearish trend line and then wait for it to, or maybe if let's say you get the same method that I gave you about H1, you get 2 pin bars there or a pin bar one, and then you decide to put your buy stop above, you're more than welcome to do that. But remember, the M15 structure looks like this. So meaning if you get your buy there on M15, as much as we can say we are inside the daily support, but M15 is not yet showing that it wants to go up. Meaning if you take your buy there, don't ignore this. What if it will continue doing this before taking off? Well, and that's why I'm saying, when you're trading, make sure that on the very same time frame that you're trading, you identify the areas of the opposing structures that can cause resistance to your wave, so that when you're trading, make sure you can exit there. If you have got 2 positions, for instance, you can exit one, take the other one, put on break even, and just give it the benefit of the doubt that it will break out. And then when it does, at least you manage to get an early entry, and that early entry will be more like a sniper. If it moves all the way up, it will be like a sniper on what, when it moves, like when you hold for a couple of days, then it will be like a sniper. But remember, the way you entered was that you entered here, but you were supposed to exit. But if you've got 2 positions, or if you are, what I don't want you to do is to watch this thing come back to your initial stop loss. Rather, watch it come to your stop loss being above, so that you don't lose anything. You were trying to catch the whole thing, but it didn't happen like that, right, man? Because I'm saying we can't just buy and hope that it will do this. It can do that, Mara. That's not a good way of doing things. Rather, wait for it to go up there. When it hits the area of resistance in the form of a trend line, opposing structures trend line, or the bearish trend line, that's when you move your stop loss to break even, and just watch the battle between the bullish and the bearish force. The bullish force is the one that pushed up there. The bearish force will be coming from the trend line, and then if the bullish force wins, then it's working in your favor. Then you just continue holding like that. All right, I hope this makes sense, guys, and then we will just continue monitoring, and then yeah, I will see you in the next video. Nothing has changed. This is still the same setup that we had last week. All right, let's just keep an eye on it, just in case if I don't have time to monitor, but you must just keep an eye on it. All right.